welcome to VSA Capital 5-Minute Morning Miner, and it's Friday. Yes, it's Friday, 5th of September. The sun's shining. Actually, I think the weekend's going to be all right, but enjoy it because then the weather's going to start to turn a little bit. But morning, Paul, how are you?
Good morning, good morning.
Right, I think this morning we will start on what I would describe as a little bit of a double story because there's not a lot of huge amount of news out there. But there's some news out between Elemental, Altus, but that leads on to Tether as well. So why don't you start off, Paul, with the news on Elemental, and then I will tie it back into what's going on with Tether and also what's going on with cryptocurrencies and gold and commodities. And it's probably going to end up as a bit of a discussion Friday, 5-minute morning miner. So off you go, Paul.
All righty. The news out there that we have two smaller TSX-listed royalty companies that are going to merge together here with Elemental Altus and EMX royalty to merge up. Elemental Altus will be the surviving or controlling entity, which will then become a new under the new name of Elemental Royalty. It ends up being about a 41 or 51%, 49% split between shareholders as far as the deal is concerned. And there is a concurrent raise in this story as well with Tether Investments, where Tether will be essentially helping to back a $100 million additional gross proceeds raised at a price of Canadian dollar 84 per share. Of course, with such mergers, there's going to be officer and director or board of director changes too. In this case, executive Juan Suartori will continue as executive chair, and David Cole from EMX will be the CEO. But Fred Bell, who is CEO of Elemental Altus, will then become COO in this particular evolving board at this stage. So the whole point of this is with the two combined companies, it builds scale as a royalty company with a anticipated valuation over $400 million, which should give greater confidence to the North American institutional investors to backstop the company going forward.
So that then leads on to the headline in the FT today, actually, which is that Tether holds talks to invest in gold miners, and that it's discussing investing straight into gold miners, which has sort of caught people out a little bit in surprise. I don't think it should have done at all. Tether has actually been doing this for some time. It actually, I believe, holds about $9 billion worth of gold bars in Zurich as to sit against it as collateral for its stable coin. They also, the FT article actually suggests they don't have a stake in Terra Nova, which is a gold mining investment vehicle. I actually disagree with the FT there. I believe they do have a stake in Terra Nova. That's because I talked to someone who works at Terra Nova and he tells me they do. And Tether has for some time been talking about getting into mining. And if you think about cryptocurrencies and Bitcoin, whatever you want to talk about it, what you do there is you use an awful lot of energy to create something that's very scarce. Well, I would suggest to you, Paul, that's sort of what you do when you discover gold, isn't it?
Well, you essentially find something which is relatively scarce, yes, and because it is a recognized store of value across the world, that gold is, regardless of what currency movements are or which nations are holding it, and consumers recognize it as a thing of value too. It's worthwhile to have it for sure.
So, but the point is, you use a lot of energy to get your gold as well.
Yes,
So there is an awful lot of similarity, and that's why, of course, they talk about mining for Bitcoin because it is so similar. Now, also, I noticed, I think it was yesterday, Power Metals were getting involved with a crypto group in order to help fund mining projects. So there is a very natural link here. Of course, the cryptocurrency market has massive liquidity, massive amounts of capital. And if that starts to flood through to mining and commodities, which would make an awful lot of sense, it stokes more fire on the commodities bull market, which we're in. And this is why we are actually so positive on the commodity sector at the moment. We are in a huge bull market. And this is just more proof of it, to be honest with you. So I would suspect that the vast majority of people are underexposed natural resources and mining, critical metals, probably don't quite know how they want to play it. You need to be involved. It's going up. It's going to go a lot higher. It always goes a lot further than you expect in a bull market. So just be warned. Right, there you go. That was a bit of a punchy Friday morning. What else? Do you want to talk about? I think yesterday you were a bit upset, Paul. You didn't talk about Pan-African Resources.
Yes, that's
So do you want
right.
to mention it today?
Yes, I think so. It is rather significant, and it is proof, too, that London-listed gold producers actually are participating with the nice gross margin improvements as well, and particularly in this case, demonstrating yet again that South African gold producers as well are participating in this story. In Pan-African's case here, they have the obligation, because they're listed on the JSE, that they have to tell the market if there's going to be material change in their earnings or production of greater than 20% for any particular reporting period, and they have to tell them before the actual numbers come out. And in this case, that they will have a really big boost in the earnings per share, probably in the range here of between 5.68 and 6.10 cents per share, because of the big increase in the gold price that they've received of over 35.7% from the prior reporting period. They also had the good news, too, that they expect a gold production guidance increase here that they're making, that they will produce for the year ending 30 June 2026 at least 275,000 ounces. So very good news there, and wanted to make sure to give that a shout out.
Well, talking of London gold companies that are performing well, one that actually virtually ever gets talked about now is AltynGold. It's actually a standard listed company, so it doesn't actually have an advisor, but it's currently trading at 840p. It's up 328% year to date. It's been one hell of a performer. It's interesting, is it doesn't have an advisor, doesn't have a PR company. Idar, the CEO, does no marketing whatsoever, from what I can gather. Very nice guy. It's in Kazakhstan. Up 328%. Who would have thought it, Paul?
Yes, that's right. It's certainly, we're looking at a time that is we're not used to for both AltynGold as well as the gold markets in general.
So, well, that just shows you that things can perform even when you're not running around just talking about them. And again, we've mentioned a few stocks. I talk a few stocks to people. Some of these smaller natural resources stocks, which people have sort of forgotten about and are down 90% off their highs. It is only a matter of time, and I can't say exactly what the time is, but this happens in bull markets. People pick up on them. There's no liquidity. They buy a few £10,000 worth of shares, and before you can say Jack Robinson, the stock's up 200%. There's a few out there that are like that, and it's worthwhile. If I hate to use the word, but if you're a little bit of a punter, you could spread 5,000 here, 5,000 there, and you'll almost certainly hit a 10-bagger. I think most people know the names of the stocks that we like, so no need for me to repeat them. Right, anything else, Paul?
That'll do it for today.
It will. Enjoy your weekend, everybody, and we will be back on Monday. You may not get me. I've actually got to go to Cornwall next week. There's a whole load of mining business. I've got to do that all week. But I will be doing, I certainly won't be doing it Tuesday either, actually. But we'll just see. We'll work it out when we get there. Enjoy the weekend.
Very good. See you.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.